for euro dollar, we're going to use basically engulfings, but in an advanced way. Okay, I'm going to be explaining what's engulfing first. Can you guys see my screen? Everything clear? Okay, so what's an engulfing? An engulfing is basically the last push or the last move before the price turned in the original direction. So if the price is bullish, you're going to have some corrections, right? You're going to have some pullbacks. Price is not going to go all the way up. It's going to have an up move, pullback, up move, pullback. Now, at each pullback, okay, the last push before the price went up is your engulf. Okay, that's not just it. The engulf has to be fresh and it has to have a very good historical data. Okay, we're going to be talking about that in a bit. So how do you mark the engulf? How do you mark if it's fresh or unfresh? So we're going to be using the engulfs on M15 and M5 only. Okay, those are the only time frames that we're going to be using the engulfs in. So let's go to the M15, and then we're going to look at structure, breaks, and then we're going to identify the engulf. So here, as you can see, this is an up move, okay, and this is the last pullback before the up move, okay. So you have to mark the last candlestick before the up move. So you see in this pullback right here, the small pullback, you're going to look at the last candlestick before we started going up. So the last candlestick would be this bearish one, okay. So once you mark this bearish candlestick, okay, once you mark this bearish candlestick, that is your engulf. Okay, this is how to mark an engulf. The second step is identify if it is fresh or unfresh. Now, this engulf, for those who never attended my engulf session, do you think this engulf is fresh or unfresh, and why? Unfresh, okay. Why do you think it's unfresh, Clyde? Okay. Okay. So most of you are saying not fresh, but you guys attended my classes before. I only asked those who are new here. But let me explain why it's unfresh, because some of you certainly don't know why. Now, as you can see, I marked my engulf. What I look for is the candlestick that goes out of it. So the candlestick that goes out of it with a body closure, not just a wick. Now, this is the candlestick that went out of it with a body closure right here. Now, after that body closure, you're going to look if price ever came back after that body closure. So it doesn't matter if it comes back with a wick, with a body, as long as it does come back. Now here, as you can see, this is a wick. This engulf is unfresh, okay? Let's take a look at another example and let's see if it's fresh or unfresh, right? So up move, the last pullback, you're going to have the last candlestick before the up move. Now, this engulf, you're going to look at the body that closed out of it. As you can see, this candlestick did not go out of it. The second one did with a body closure. After that, price never came back. As you can see here, did not touch, did not touch, did not touch, nothing touched. As you can see here, this engulf, then it is fresh, okay? This engulf is fresh. Now, does that mean you can sell or buy on that? No. Okay, that's just the first step to identify if an engulf is good to use or not. Now here, as you can see, okay, I'm reading the chat and most of you are saying wick touch, wick touch. So we don't care if it's a wick. Let me repeat that. Here, there is a wick, correct? But it doesn't matter if it's a wick. Let's say price came back like this. It would still be unfresh because it's not like the key levels, okay? The engulf in SNR, when price comes back with a body, it is unfresh. Now, let's go back to this. As you can see here, it's the second candlestick that closed out of it, so it is fresh. Okay, it doesn't matter if it's the first, second, third, fourth, as long as it never came back after the closure here, then it is fresh. What's the third step? The third step is to identify if there is a good historical data before in that engulf. So you're gonna draw your zone all the way back, and you're gonna see if price was rejecting that area in basically the previous weeks, months, years. Okay, so here, as you can see, this is the first, okay, first rejection, okay, the first bounce basically. As you can see, price here, every time it goes to this zone, it is bouncing off of that. So here we can identify that the zone is good. Look at that. Okay, here. Okay, so in order for you to say an engulf is good, you need to identify if it is fresh or unfresh first. Second thing is it has to have a good historical data. As you can see here, bounces here. Every time price goes in that zone, look at that. Okay, every time price goes in that zone, it gives you multiple rejections. So from these two signs, we can say that the engulf is fresh. Now, how do you take these engulfs? You have something called the reversal areas. So price tends to move from a reversal area, and then it reverses, goes to another one, and then it reverses, so on and so forth. Okay, so you have to identify these reverse areas. So the reverse areas, you have two types. Okay, you have two types. The first one is going to be on the daily. So we learned that the daily candlestick, it has four things. It has the high, the low, the open, and the close. So this is the low, this is the high. If the candlestick is bullish, you're gonna have the open right here, the closing right here. If it is bearish, the open right here, closing right here. In today's session, we're going to be focusing on the highs and the lows of the daily candlestick. Once you draw these zones, okay, once you draw these zones, or basically lines, when you go to the M15, most of the time, what you're going to notice is that price takes that daily high, then reverses. Does the same thing with the daily low, take the daily low and then reverses. So it reverses from where? Okay, so here it bounced off of an engulfing that is fresh and has a good historical data. Here it bounced off of an engulfing that is fresh and has a good historical data. Okay, so if you have here, for example, a fresh engulf and it has a good historical data and it's still not above or below a reversal area, you're not going to take it. Okay, you're not going to take it. So this is a bad engulf. So even if you have the two signs and it's showing that the engulf is good historical data, fresh, but if it is above a reversal area or below a reversal area, which is the first type is a daily high, daily low, then it's not good to take. Okay, the second type is a session high and low. So it's going to be the same thing. So you have the Asian session and you have the London session. So the Asian session starts from 2 a.m. to 5 a.m. New York time, and the London session, the Asian session starts from 8 p.m. to 12 midnight by New York time, and the London starts at 2 a.m. and finishes at 5 a.m. New York time. So what you're going to do is you're going to find any indicator. It does not have to be this one. Just remember the time, 8 to midnight and then 2 to 5. So what you're going to do is you're going to mark out the zone of Asia. So you're going to box it all. So you're going to box it all like this. So you're going to take the Asian range. Okay, you're going to mark the highest point and the lowest point. And these points are going to be your reversal areas. As you can see here, this is the highest point. This is the lowest point right here. Okay, so as you can see, price takes this or takes this and then reverses. Okay, as you can see in London, we took the Asian low right here and then we went up. Now we went up from where? We went up from an engulf. Now, unfortunately, that day, the engulf right here missed by how much? It got missed by 0.5 pip, but on M30, okay, so sometimes you can cheat yourself and go to the M30 when you have basically a small difference of 1.2 pips. Okay, so here you could have marked the whole zone. As you can see, this is a good engulf. It is fresh. We closed out of it, never came back. Price touched it and then went up. Okay, my entry was not here. Okay, I did not enter here. I actually entered here, and we're gonna talk about the other type and another pattern of using engulfs if you missed the original move. So in here, I followed my plan. I did not take it on M30. Okay, it is fresh, and you can check the historical data if it is good or not. Okay, and then price went up. We had another entry right here, and that is the second entry. So here you have two types of reversal areas. You have the daily highs and lows. You have the Asian highs and lows and London highs and lows. So if you identify the Asian low, Asian high, the trade you're going to be taking is going to be in London. Okay, it's not going to be before. It's not going to be in this. Okay, here is a no trade area, no execution. Here also between New York and London is not going to be any trade. So London starts at 2 to 5. It can create reversal areas, a low and a high. And then on New York, it's going to take that reversal area and goes the other way. Okay, it would only go the other way if it finds an engulf. So as you can see here in New York, what did it do? It took here the Asian high, but then why didn't it go down? Because there was no fresh engulf. As you can see, this was unfresh, so price closed out of it right here. Price came back and touched it with that wick. Okay, so it is unfresh. Now let's take a look at the daily example and the chart. I'll show you today's trade. It is still running. Okay, I have a sell up here, and I'll tell you how I got it. So you can go to the daily. As you can see, here you have a daily candlestick. We have the high and the low. Oh, by the way, there are two types of marking the daily high and low. So you can find it from the previous daily high and low. So if you're at, let's say tomorrow, right? Tomorrow, a new candlestick opens. How you're going to analyze is basically going to get a previous daily high and low. Okay, that's the first type of marking the reversal areas. The second way is looking at a previous, basically an old, a very old daily high or low that we are approaching now. Like today, we opened here and we were approaching this high right here, so I had to mark it. I had to mark it. So what you're going to do is you instantly drop to the M15. Okay, you instantly drop to the M15, and then you can go and mark a fresh engulf above it with a good historical data. Now here, as you can see, you have this one, but is this one fresh? Okay, the last up move before the down move. Now, as you can see, we closed out of it. Price wicked it. Now this is not fresh, so we don't want to take that. Here, what do you have? You have another one on M15. So this one is fresh because price closed out of it, never came back. What you're going to do is you're going to look at the historical data. So you're going to go all the way to the left. And as you can see, price here bounced, 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 bounced here as well. Look how it perfectly respects the zone. Look at that. Okay, look at that. It's very perfect. That's a very good historical data. Now, as you can see here, 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 that's a very good zone. Now, what you're going to do is you're only going to put a limit, and the trade should be executed only in London session or New York session. Okay, now that is how I got my trade for the day. As you can see, it touched in New York. New York went all the way up, and boom, took a reversal area. Your sell is going to be right here, stop loss right here. And now here's the very asked question. Where is your TP? Where are you going to put your TP? Now, if price takes an Asian high, okay? If price takes an Asian high, hello, can everyone hear me? I think I'm lagging. Yeah, my trading view stopped working for a bit. Hello, hello, everyone. Can you guys hear me? Okay. So where's your TP going to be? So it's going to be either at the last low that got created on M15, or it's going to be a session low. So if you took the trade on New York, now what did New York do? We took the London high. Now your TP can be here at London low. Okay, that's your second TP. Your first TP is just going to be right here at the last swing low right here on M15. And your major TP, since we took the daily high, it can be on the daily low. So as you can see, in 1 hour and 41 minutes, if we close here, the last daily low is going to be right here. So that is going to be your TP. But for now, that's not the daily low. The daily low is right here. But I do not think that price is going to go there like in 1 hour and 41 minutes. So just TP here, okay? So that can be your main TP. So yeah, also for tomorrow, if you guys can see, we might have a possible buy setup, which is right here. As you can see, this is a fresh engulf. Let's take a look at our historical data. Now, as you can see, price been rejecting here. Okay, here is not a really good bounces, but here it respected very well here as well. In these zones as well, we have a really good bounce. So what we're gonna do tomorrow is we're only gonna wait for our sessions. So you're not going to execute the trade in Asia. So if Asia does this, that means this is invalid. You're not gonna take the buy. It's basically going to hit your stop loss. But if Asia does this, and then we take the Asian low, because the Asian low is also reversal area, we go and take it as well with the daily low. And we hit this in London. It has to be in London or New York from 2 to 5 a.m. New York time, or from 7 to 10 a.m. New York time, and then we can take our buy. Now, where would be our TP? The first TP, it can be the last swing high, as you can see here. Okay, the second TP is going to be the Asian high or London high, whatever. Okay, the third TP is going to be the daily high because we took the daily low. You can TP at the daily high. This is the daily high. This can be our TP. Okay. So yeah, if you guys have any questions, please feel free to ask me in the chat. Does this method work on other pairs too? Yes, the method works on other pairs, but here's my advice to you guys. Stick to euro dollar because it respects the engulfs that has a good historical data. Like you can't imagine how good it works on euro dollar, okay? So you can definitely use it on other pairs, but for me, euro dollar is just my comfort zone. I've been trading only that in gold for a long time. So I never tried this on any other pair, so I can't tell you guys, okay? So here, if we hit the TP, it's 5.84R. I don't suggest you take any partials along the way when you're trading phases, but if you're trading live account, then you can feel free and go ahead. So why can't we use this? Guys, give me just 2 minutes. I'll be right back. Okay, so do you only take the M15 engulfs? I'm gonna show you an example where I don't take the M15 engulfing. Does storyline affect the engulf? Okay, good question here, Clyde. Now, does storyline affect the engulf? Yes. If you are trading with the storyline, your risk should be 1%. If you are trading against the storyline, your risk should be 0.5%. And this is for prop firms. If you're trading a personal, you would want it to be 10% for storyline and 5% against the storyline. I mean, you can create your own risk management plan. This is mine. Yeah, we can use previous daily high low only or any old day high lows as well. Yeah, I mentioned that you can use the previous one and very old ones. Now, as you can see in this sell example, what did we take? So here we took the old daily high. Okay, we took the old daily high. Now, yeah, I'm gonna show you an example where I don't use the M15. Now, yeah, let me just find that example because it's been a long time since I took that. M5, M5, M5. Yeah, I think it's right here. Let me just mark that so I do not forget. If you go and check here, exactly, this is the trade that I took M5 on it. I do remember my setups, guys. So here you have a daily high. And on this daily high, it is a reversal area. We would want price to basically go up in London or New York and then go the other way. On M15, if you go check above this daily high, you will not have any fresh engulfs, only this one. Basically this one, first of all, it's too big, okay? Second of all, it's way too far, okay? So we don't want to only have this. I'm not saying it's not valid, but if you will be happy with, I don't know, like 20 pips stop loss for euro dollar, that's like using 50 pip stop loss for gold. I don't want to be doing that. So I'm not going to take this even if it hits and goes down. I am not satisfied with 1 or 2R on the engulfs. Okay, so what you want to do is you want to go to the M5. Hopefully we can go back that much. Yes, we can. Now above this daily high, as you can see, what do you have? You have 1 engulf that is fresh, 2 engulfs that are fresh. Now here, as you can see. So you have 1, 2, and the third one is also right here. Okay, so what you're going to do when you have 3 engulfs. If this one hits before London, basically between Asia, between London, if it hits, that means you're not going to sell there and you're going to sell on the one above when it hits in London. The second scenario is that this one hits in London. Yeah, you can take your sell stop loss right here. Okay, if you don't want to take a loss and you want to basically sacrifice some risk reward for the win rate, you can put your sell right here and your stop loss above both. That's the third scenario. Okay, the fourth scenario is you actually take a loss and then you can enter again on this one. Okay, so let's take a look at what happened on the first engulf. Extend it to the right. As you can see, price touched it in New York right here. As you can see, this is New York, open, touched it, and then you can sell right here. Now, where is your first TP? Your first TP is right here at the last swing low. That will be 2.53 RR. I am not satisfied with that. I will never be. So yeah, just set your break even at the last swing low. This is what I do. And the next TP, sorry, that was on M5. Let me just check that again on M15. Yeah, it is the same thing. So swing low at M15. Now the second TP is going to be at the session low. As you can see, this is London. And you're going to take the low of that session. That is your second TP right here. That is 5.77 R. That is good. The third TP is the daily low. Can we take the daily low? Yes, because we took the daily high. So because price takes the daily high, goes to the daily low, takes the daily low, goes to the daily high, so on and so forth. Okay. Do not forget to check the storyline. So here, M15. So the same thing with the engulf on M5. You're going to check the historical data on the left. Okay, you're going to always do this. As you can see, 1, 2, 3, 4, 5, 6. That's a very good engulf. Now, that can be your last TP. Okay, you always have to check the storylines. So that can be 10.16 R. Yeah, so what's left now is the breakout engulf and the continuation engulf. So that's what's left. So before we go ahead and talk about that, if you guys have any questions, please go ahead. Do we need the engulf to be on key level? No. The key levels, trading strategy, continuation, whatever, is a different strategy from the engulf. So you should not combine both. Okay, first we have to look for daily highs and lows, switch to sessions, look for either Asian break in London. It's not called an Asian break. So in order for people to understand, it's an Asian. You're gonna look for price to just take it. Okay, doesn't have to break it. So this is Asian high. This is Asian low. In London or New York, correct, you're going to wait for price to take it, not necessarily break it, but it can take it with a wick and then go back down, okay? Look for engulf that has a good historic data and execute. And it has to be fresh. Yes, correct. So how to show the trading sessions, trading view. You can use any indicator, bro. Whatever indicator that makes you happy. I don't know. So for me, I use ICT kill zones, Tradinator, whatever. But the time zone is pretty fucked in it, so you have to use -4 New York time in order for you to have the same time as me. It can take both, Clyde. So New York can take the London high low, or it can take Asian high low as well. As they always limit orders, we have good way to confirmation. So there are no such stuff as confirmation in the engulfs, so it's just limits. You're going to be placing the limits only. More than 5 fresh engulf should use. No. If there are more than one M5, okay, so in order for you to go to the M5, the M15 should not have any engulf. So that's the only scenario where you're going to go to the M5. So if M15 is unfresh and you don't have any engulf on M15, then you go to M5. To use Forex.com. Okay, so you have to use Forex.com for this. The only broker I use is Forex.com. Okay, now as you can see, we approached our second TP. That's a pretty good trade. Yep. So you can use that on gold as well, but I don't do that. So because I'm pretty happy with the results I'm getting with euro, so I don't want to be greedy. Yeah. The second type of engulfs entry is pretty simple. You're gonna have a breakout instead of touching a limit. So here, let's say this is Asian low, guys. And below this Asian low, you're going to have your fresh engulf, just like today's entry, okay? I took today's entry with this. So price does what? It goes down. It does not touch your engulf and then goes up. And the last swing high, that should have been your TP, gets broken, right? It gets broken. So once it gets broken, you're gonna have another engulf right here that gets created. Now it has to be fresh, obviously. And then when price pulls back to it, here can be your entry as well. Here can be your entry as well. So price pulls back, entry, stop loss right here. This is today's entry. Now let's take a look at it. So we go to, okay, yeah. We took the Asian low. And then on London, we did not hit our M15. Okay, we did not hit our M15. Now, as you can see, what did price do is it went up. It broke the last swing high. As you can see here, that's a breakout. The break should be with should break the wick. So the body should break the wick, or the body should break the body, like we used to do on the breakout for SNR storyline. Now price pulls back to the last engulf before the up move, and it is fresh. Here can be your entry. Here is another thing that you can do. This M15, you can refine it down to the M5, just like we do with M5, H4, H1. Just do the same thing with M15, M5. So M15, M5 inside of it. Boom. Okay. You can take your entry from here. Stop loss just below the box. Okay. It has to be exactly below the box. Unless it is very, very small pips. So if the zone of M5 or M15 is like 1.5 pips, 1.4 pips, then you can extend your stop loss to 3.3 stop loss or more. Okay. So we don't want it to be less than 2.5 pips. So here you have 2.5 pips with some spread or stuff. So you can just put it at 3 or 3.3. I prefer that. Now, your TP can be the Asian high. Why the Asian high? Because we took the Asian low, and that is 3.82R. Now, with the storyline, if you know the storyline and the storyline is bullish and you have a daily target, then you can extend that to your target. So for me, I held that all the way down, all the way up until we took that daily high, and then I took the sell. So yeah, that is your first, basically the second entry pattern. You have a breakout, pull back, and then go up. Now there is the last scenario or the last case where you're gonna need to use an engulf in a different way. So it is called the continuation engulf. It is also pretty good. So what you're gonna have to do is wait for price to take the daily high or daily low, or Asian high or Asian low as usual. Now Asia and then London takes both. Now here, when London takes both, we know that price is certainly going to go to the daily high, right? So if in London we do not reach our target, how do you trade New York? New York can be traded in two scenarios right here. It takes the daily high, touches an engulf, goes down, okay? It can pull back to an engulf that is fresh and has a good historical data that got created in London, and then go up, okay? Finishes the target, because New York has to go to the target. So if it goes to the target and does not pull back, then you're taking a sell. If it pulls back before going to the target, then you're continuing the direction. Okay, now I'm gonna give you an example of a trade like that. So here we took, what did we take here? So here we took this daily low right here. Okay, now below this daily low, you're gonna look for an M15. Okay, an M15. Now this is our M15 right here. Okay, you have to be fast with it, guys. So what's the candlestick that went outside of it? It's not this one, because it is the same level. It did not close outside of it. It closed with it, so it doesn't count. Now closed out of it, price never came back. You're gonna extend that to the right. Now this one, I put my stop loss below it. Why? Because I have 1.4 pips. So as you can see, this is what price does when you have a very small zone. You prefer to extend it to 3.3 pips. I just love that number, 3.3, okay? 3.3, and then your TP, where is your TP gonna be? It's going to be at the daily high. Why the daily high? Because we took the daily low. So the daily high is right here. Now, how do you trade all the way up there? Okay. Let me just fix that. Okay. Your first TP can be right here. Okay. Last swing high, it can be there. But how do you keep trading all the way up there? So, as I said, if in New York we did not hit that target, what New York does, it's gonna pull back to a fresh engulf. So bear with me here. Price went up. It created an engulf right here. Price came back to it. That could be a first entry. Price went up, created the engulf right here. As you can see, price went up, it broke it. Price pulls back, you can take another entry there all the way up to the daily target. Okay, so yeah, let me read the chat. If I took a sell on first level, do you have to enter the same size position? The next one, should they double it? No, you're not gonna double it. You're always gonna put 1% risk per zone. Can we follow it up with continuation orders? Yes, you just explained that. Could that happen in London as well if it doesn't take high or low of Asia? It can happen on New York if it does not take it on London. So we can say that Asia is like this, London is like this, and then New York then starts to move. Yes, that can happen. Any questions, guys? Now, if you go check my what's the PM session? So if you go check my Instagram on my highlight, let me just share that with the group. This is my entry, the buy that I got. I don't think I put it in the highlights, but didn't. Okay. Archive. Now, if you go check the group, I'm gonna send the entry that I got right here. It's the same exact one that we're talking about right now, and as you can see, it's pretty simple. It's pretty simple. Nothing is complicated about it or anything like that. So just look at the reversal areas. We have two types. I'm just gonna assume that. So two types: daily highs and lows, and all daily highs and lows. You have Asian highs and lows, London highs and lows. So you're gonna mark engulfs that has good historical data below or above that, and it has to be fresh. So wait for price to hit one of these, okay, on London or New York, and then yeah, you can trade. No, I don't. I never heard of PM session. I don't use that. Yusuf. Okay. How do you know which low to take, Asian or previous daily low? So yeah, good question here. So someone asked me, how do we know if we're gonna just take Asian low and go up, or take both and then go up? So the way to know that is you're gonna look if there is an engulf that is fresh right here. Now, if there is a fresh engulf right here, if London opens and it hits in London, that means we're gonna go up without taking the daily low. If it hits before London, then it means we're gonna hit stop loss and we're gonna take the daily low and then go up. Now, if you don't have any engulf below the Asian low, that means we're gonna take the daily low as well. These are three scenarios, okay? Sorry. Yeah, that's basically it. Any questions? Hope you guys like today's session. You're gonna see the magic with this, okay? I promise you, if you put in efforts, you try your best to analyze it on Euro, okay, it's very simple. I tried my best to simplify it as much as possible, and I hope you find the good success with it, okay? So, yeah, guys, hope you guys like today's session. I'll catch you up on the next one. I'll be announcing when is going to be the next one on the weekend, okay? So yeah, I'm gonna send the recordings on the DMs. I'm not gonna send it in the group chat. So just DM me on Telegram. I'll be sending them later on the night. Okay. So see you guys next time. Bye bye.